Alright, welcome back to the channel. In this video I'm going to run you through a setup that I'm looking at right now on the pound yen that is a reversal setup, but a very high probability move, and I'm looking to get involved myself. So I'm going to walk you through my thought process and how I'm thinking in terms of entry technique, risk reward profile, and taking profits off the table. So let's get stuck in.
All right, the first pair I want to talk about is the pound yen. So if you watched my last video on YouTube, or you was here last week, you'll know that we were looking at this breakout and retest. It just so happened that in that breakout and retest we had this bat formation form, which allowed traders to get in more aggressively at the decompletion of the bat formation, and then the rally happened, right? So the breakout and retest, if you look at this as a breakout and retest, I mean, it's textbook stuff. You go to the 4 hour, look at that. That is one of the most textbook breakout and retest patterns that I've seen, and perfect, right? And then you had the rally, the breakout. So the question now is, what's likely to happen next on this pair? What is likely to happen next? Where are we going? So what I like to do is to go out onto the higher time frame. In fact, I'm going to go out on the monthly just quickly, right? And I'm going to show you what's happening in this long term, because back in July 2008, before we saw this massive tank, we had this final push up to this resistance level at 213.79, or basically 215 flat. All right, and as we approached 215 flat, we saw that previously we'd struggled to break and close above that, and then we blast. Remember, these are the monthly candles, guys. Yeah, these are monthly candles. So every month we're trying to push up, we're slowing down, we're getting rejected, and then boom, we have this big month that breaks and closes above that level. And then on the way down, we blast through it, and then as we approach that level again, there's some respect there, and we fall off a cliff, literally fall off a cliff. I mean, that is, you know, this is the GFC, right? But right there is some stigma, okay? So we haven't been that high until today, which is the 13th of January 2026. Now, of course, this head and shoulders pattern here, by the way, look how prolific head and shoulders and how powerful head and shoulders setups are on the pound yen. This is why I trade head and shoulders on the pound yen. But look, we had the head and shoulders there, head and shoulders there, right? Great reversal patterns on these big monthly time frames. And obviously this level up here is going to be the highest probability level for a short, you know, a structure-based reaction from that move. But we have continued to put in new highs. This month is a new high, and we're still continuing up. But where are we pushing into? This major high, this major resistance level from 2008, which was the start of, you know, the start of this GFC. Although we crashed here, this was technically a 20% crash here. We just continued down after that, right? So that's significant. That's significant. That's the monthly time frame. We could even go down into the weekly, start looking at that as well. So you can see back here on the weekly time frame, again, this is kind of has some significance. And then as we drop down to the daily time frame, which is my higher time frame. Whoops, let's just go to the daily. If I can get it right. We can start seeing, you know, this is our breakout and retest pattern here. We've rallied back up into this level here. If we start looking at the last breakout pattern here, you can start bringing on like equal measured moves, and you know, you could start ABCDs and get, you know, harmonics and things like that, and you can start building out a CTS score up in this zone as well, right? So you can start to see some confluence in that zone. You can start to see where price is likely to react, or we're likely to see a little retracement there. And what I'm looking for is although we are bullish, and if we go to, let's just go to Forecaster quickly and look at the seasonality of this thing. From now, you know, until, you know, it's a very bullish projection, Okay, so we're a very bullish projection, and maybe we'll see that next high tested before, you know, the one that was the head and shoulders pattern on the monthly there before the GFC. If you're really building on confluence, you can start looking at, you know, how you stack this confluence up. So you've got that 215 flat level as well, if you guys are into even handle numbers, which just is smack bang on that equal measured move, which is great. Okay, you could even, you know, bring on your Fibonacci extensions and things like that, right? To just stack confluence factors up in that zone, to thinking like as many traders as possible, basically, to see what's likely to happen at that level. And really simply, one of the nicest things that I like to see is big bullish momentum. Because if we see big bullish momentum leading up to that zone, what's really obvious is when price starts to run out of steam at that zone, and then when all those stars align, it's a real high probability setup, right? You've just got to look for your entry technique. Now, depending on how major that structure zone is, how respected that structure zone is, can determine how aggressive your entry technique can be. So if you're not an aggressive trader, if you don't have anything up your sleeve that's going to allow you to consistently get involved aggressively, like just a limit order, or you know, an at market order when you go into 215 flat, say, or a 3-bar reversal or something like that, which is a bit less conservative, you know, a bit more conservative, sorry, because you're having to wait for the 3 candle setup. But if you need a double top, you might miss something that you would have got in the 3-bar reversal. Or if you wait for a 3-bar reversal, you might miss something that you might have got on a limit order or an at market order. So there's levels to this, right? And depending on how powerful that structure zone is, it's great to have a way of dynamically approaching the entries, which is something you're going to have to develop over time, because you have to go and test all this stuff, and it has to be very consistent. Otherwise, you're not going to get consistent results, because you have to have a stop loss level, and you have to have a consistent set of rules that allow you to get in and out the same way all the time. So now we're approaching this level, I can drop down to my trading time frame, and what I'm seeing straight away on the 4-hour is RSI. RSI is now overbought, so up at 84, and the market's in that zone. We're pushing into that zone. RSI is overbought. So all I'll look for here now is literally a double top. And for the double top, I can look for the lower time frame. So I can go down to the 60. Again, you can see it's overbought here as well. And I'll wait for a double top entry on the 60. And if we get a valid double top up here, and it looks like something like this, right, and we get this nice V top up here, and it's valid, and we put equal tests to the high, we've got all these nice rejection candles as well, right? This is also an ascending channel. If we drop down to the 15, you're going to see this ascending channel, right, which is again another bearish indication that we're likely to see a rollover. And having all this, you know, this knowledge of various price action patterns, although I'm not trading a ascending channel, or I'm not trading a limit order or a pin bar or rejection bar or anything like that, all of the knowledge of these patterns is giving me confidence in creating a more aggressive entry. So now if you've got an ascending channel as well, you might say, do you know what, screw the double top, I don't need a double top, all I need is a doji on the 4-hour, right? And then all of a sudden you're just waiting for a doji or a pin bar, right? So if this candle closes as a doji right now, which is, a doji means indecision, and a doji is a candle that looks like this one right here, okay, although this hasn't closed yet. But you might say, if we get a doji candle on the 4-hour, that's it, I'm entering. And my stop loss goes X pips above the doji, or, you know, you might even get your stop loss up here somewhere and get your target down here and still get a great reward to risk profile. So this is something that I'm really got my eyes on. I'm, you know, going to be watching this all day today, on and off. You know, I'm not going to be glued to the charts, but I'm going to keep my eyes on this one, because this is the best setup on the portfolio at the moment. Another great thing about this, just looking at it before I get involved, is where the targets will go. Okay, so obviously you could just, I'm bullish this pair. What I don't want to do is be greedy with targets, so I simply go above previous inside structure. So the most I'll be taking off the table here is right here, okay? That's where my target will be. And I'll be looking at shorting this somewhere. Ideally, you know, this would be the ideal situation where we'd get a tight stop above a double top on a lower time frame, and then we'd get targets down here, which would be about 2.5 to 1, which would be a really nice setup. You know, 2.5 for a little retracement like this is a great setup, and it's yeah. So that's what I'm looking at. We'll keep an eye on it, and I will update you if anything changes.
Alright, so that's the trade, and as always I'm going to end the video there because I don't like hindsight trades. I want you to be able to follow these along. I encourage you to go and look at these videos, then go and look at the charts and see what happened. So I'm going to leave the video there. Let me know what you think. Let me know if you want to see more of these types of videos. Oh, and if you want to know how to backtest strategies like this so that you can really optimize them for performance and to suit you as a trader, go and check out my video tutorial on how to backtest like a professional trader, and I know you're going to enjoy that one. So I'll see you in the next one.